Pay close attention to what I'm about to reveal, because your financial wealth depends on you understanding this exact moment. Immediately discard the illusion that this video is mere market speculation, unfounded theory, or intimidation tactics to generate cheap views. What we are witnessing is not a rehearsal. It is an irreparable structural fracture happening before our eyes, and the mainstream media is completely silent to protect the Western financial system. This February 2026, an invisible line was definitively and silently crossed in Asia. Physical silver traded on the Shanghai Gold Exchange surpassed the shocking mark of $94 per ounce. Meanwhile, the West continues to operate in the dark, selling counterfeit paper contracts at an abysmal discount. The implosion of the metals market has already begun. This brutal price differential, a double-digit spread that defies all traditional financial logic, exposes the most dangerous lie perpetuated by the big banks on Wall Street. What we have here is a monstrous systemic divergence, revealing the total disconnect between the fictitious financial asset and the tangible real asset. The liquidity of the Western futures market is evaporating, sustained only by a mountain of derivatives that lack physical backing to guarantee settlements. The Chicago Mercantile Exchange, the powerful COMEX, is selling empty promises, while China has quietly reclassified silver as a vital strategic national security asset. The East demands the physical delivery of the metal, imposing strict rules, refusing to accept settlements in fiat currency, and forcing a reality check on the West's worthless role. The systemic trap has been triggered. Internal data categorically and undeniably proves the gravity of this death spiral. The bleeding of Western stockpiles has reached an alarming speed. Registered silver in COMEX vaults, the metal effectively cleared and ready to honor futures contracts, has plummeted to the hypercritical zone of 88 million ounces. We are talking about a brutal collapse of almost 47% compared to the already fragile 2025 inventories. What the news channels refuse to report is that we are witnessing a silent bank run, a race against physical metal. What you are about to hear is the exact anatomy of how the global financial system will become insolvent in weeks, and how the elite are already positioned to profit from this total evaporation of liquidity that will destroy the unwary. To understand the mechanics of this impending collapse, you need to swallow the red pill and see through the illusion that sustains global markets. The cog that has just irreparably broken is the fractional reserve commodity system. Historically, large investment banks have artificially suppressed the price of silver in the West by selling colossal volumes of short futures contracts. They create a phantom supply, printing derivatives as if they were real metal. This accounting fraud works perfectly, but only under one non-negotiable condition: that the overwhelming majority of investors simply roll over their fiduciary contracts indefinitely, accepting profits on paper without ever demanding delivery of the physical metal. It's like a vast financial theater where everyone believes they own a silver bar, when in reality they hold only a worthless receipt, operating under a false sense of security. Currently, the Western market continues to operate under suicidal leverage, where hundreds of paper contracts simultaneously claim a single physical ounce stored in vaults. This chronic flood of derivatives is the only pillar holding the artificially low price on COMEX, temporarily masking the real and absolute supply deficit in the physical world. Imagine a gigantic industrial plumbing system subjected to relentless hydraulic pressure, where the escape valves have been criminally clogged by trillions of dollars in paper assets. The structural pressure increases every second, but the public doesn't see the metal giving way beneath the surface. This bizarre distortion starkly reveals how Western pricing has become a legalized pyramid scheme. The system wasn't designed to deliver the goods, but rather to perpetuate debt rollover and keep you trapped in the illusion of infinite liquidity. However, the gigantic premium paid for silver on the Shanghai Gold Exchange broke this cycle permanently and irreversibly. What we are witnessing now is the first of a series of extremely heavy dominoes falling towards the center of the financial system. Sovereign entities and corporations with massive capital have perceived the crack in the Western armor. They are now buying millions in artificially cheap contracts on COMEX, refusing cash rollovers and relentlessly demanding the delivery of the physical metal. As soon as the silver is removed from American or London vaults, it is shipped on armored vessels directly to Asia, where it is immediately sold at a risk-free arbitrage profit. It is a parasitic drain, a lethal leak that the West has absolutely no mathematical capacity to stop without destroying the very credibility of its futures markets. This is the true mechanical death spiral haunting central bankers right now. Every ounce of physical silver that crosses the ocean toward Shanghai reduces the real base supporting that monumental mountain of paper leverage. As COMEX inventories plummet toward the abyss, the ratio of paper contracts to each surviving physical ounce explodes exponentially, making the rush for protection even more violent. Those holding derivatives will begin to realize they are sitting in financial musical chairs, and the music is about to stop abruptly. Pure mathematics tells us that it is categorically impossible to fix this hemorrhage without causing havoc of cataclysmic proportions. The system has entered a systemic trap where all available exits lead to the same brutal implosion of the pricing infrastructure that the West has dominated for decades. Consider the only two options left for the financial elite, both lethal. If COMEX decides to play by its own rules and attempts to honor all physical deliveries to the end, the mathematics cruelly prevails. Its operational stocks, already at critical levels of 88 million ounces, will simply be depleted in a matter of weeks or months. The millisecond in which the last bullion is removed and a single futures contract is denied due to lack of metal, the paper market will instantly collapse. Confidence, the only true currency underpinning derivatives, will suffer an immediate and total evaporation of liquidity. Widespread panic will grip global trading desks, triggering mass liquidations and a chain reaction of bankruptcies of funds that depended on this phantom margin to survive. The second option is even more sinister and represents the ultimate breaking point. To avoid total collapse, the exchange will be forced to intervene dictatorially and change the rules mid-game, triggering a force majeure clause to impose cash liquidation. By forcing investors to accept inflated dollars instead of the physical metal they are entitled to, the exchange will make its final public confession of physical insolvency. This admission of technical bankruptcy will destroy the illusion of Western control forever. The price of the real metal, now traded exclusively on the free market and dictated by the rules of Asian scarcity, will explode overnight, tearing through the ceiling of any historical chart. Those who hold the paper will be holding fiduciary ashes. Those who hold the metal will dictate the rules of the new global financial order. To understand the magnitude of this implosion, we need to look at the undeniable historical evidence that the mainstream media deliberately hides from you. The architecture of this cataclysmic event is absolutely identical to the colossal collapse of the London gold pool in the fateful year of 1968. At that time, Western central banks joined forces in a desperate cartel to manipulate and artificially fix the price of gold at exactly $35 an ounce. To sustain this charade and maintain the illusion of control over the market, they irresponsibly dumped their own sacred physical reserves onto the open market. It was a systemic trap in the making, an arrogant attempt to bend the unbreakable laws of the real economy through institutional brute force, completely ignoring that true physical wealth was evaporating from their vaults at an unsustainable and deadly rate. What happened next is the same predatory dynamic we are witnessing today with Asian silver. Nation after nation, aggressively led by France, began to calculate the hidden mathematics and realize the brutal inconsistency between the uncontrolled printing of paper dollars and the actual stock of metal that should guarantee them. Like sentinels awakening to an accounting fraud of global proportions, these sovereign countries began to systematically empty Western coffers. They rejected fiat paper money and relentlessly demanded the repatriation of physical gold by plane and ship. The liquidity of the fiat system was mercilessly sucked away, exposing the terrible vulnerability of an economic model addicted to empty promises. They perfectly understood that paper accepts any lie, but the mathematical scarcity of physical metal never forgives the arrogance of those who print money without backing. The official denial by the government lasted until the exact millisecond when the coffers were completely empty, culminating in the inevitable emergency closure of the London market. It was a classic death spiral, forcing 3 years later the definitive collapse of the Bretton Woods gold standard in 1971. That was the ultimate reality check, proving that paper-based market manipulations always end in structural catastrophes. Those who believed in the government's official guarantees, who trusted in the infinite resilience of the traditional financial system and chose to ignore the clear signs of physical scarcity, were violently crushed by the devaluation. They lost everything overnight, while a silent minority, which had preemptively positioned itself in real and tangible assets, transferred generational fortunes to themselves. The system proved that it has no loyalty whatsoever to the citizens who sustain its illusory pyramid. Today, the pattern repeats itself with a mathematical precision that is almost frightening. Just like in the financial apocalypse of 1929 or the subprime implosion of 2008, all the red indicators are flashing furiously on your screen at this very moment. The West prints endless toxic derivatives to mask its bankruptcy. The East silently takes the real physical wealth. The structural signs of rupture are rigorously the same as those that decimated entire portfolios in previous crises, and the script of governmental denial is being read on national television every day. Your fear is absolutely validated by the irrefutable historical facts I am presenting here. Whoever ignores this lethal asymmetry between the mountain of paper and the physical abyss will not only be an innocent victim, but a willing accomplice to their own financial ruin when the systemic trap closes. If you still harbor the dangerous hope that Western governments, omnipotent central banks, or giant Wall Street corporations will magically intervene and save your wealth this time, it's time to wake up to the brutal reality. They are absolutely paralyzed, trapped in a systemic trap unprecedented in modern financial history. For the first time in decades, the global elite finds itself between a rock and a hard place, deprived of the monetary tools it has always used to cover up its structural frauds. The traditional bailout mechanism, which consisted of printing trillions of dollars out of thin air to flood the market with artificial liquidity, has become completely useless against a crisis of physical scarcity. You can't print fleets of ships loaded with physical silver, nor can you counterfeit the raw materials required by military and industrial technology. The illusion of institutional bailouts is dead. Let's coldly analyze the first suicidal escape route that the Federal Reserve and the U.S. Treasury could try to follow. If they decide to capitulate and enter the open market to buy the physical silver needed to honor COMEX deliveries and stem the death spiral, the result will be catastrophic. They would have to issue an overwhelming amount of fiat currency to compete directly with the relentless premium of the Shanghai Gold Exchange. By dumping this ocean of newly printed dollars into the global economy, they would instantly trigger rampant inflation, destroying the purchasing power of the average citizen in a matter of days. The evaporation of liquidity in the derivatives market would quickly transform into hyperinflation in the real economy, obliterating savings and reducing wages to dust. The monetary remedy would kill the patient much faster and more painfully than the structural disease itself. The second alternative, the sharp sword of this macabre metaphor, is absolute institutional capitulation. If Western stock exchanges decide to protect large banks operating in the short, they will be forced to trigger the infamous force majeure clause. In practice, this means suspending all physical deliveries, freezing markets, and forcing the liquidation of contracts exclusively in worthless cash. However, this public confession of insolvency would trigger an unparalleled financial panic. To prevent a mass flight of capital from the collapsing banking system, governments would immediately implement draconian capital controls. Your access to your own money would be blocked overnight, while the state silently confiscates your purchasing power to cover the systemic losses of the elites. The implosion of the paper-silver market would only be the catalyst for total financial tyranny, locking investors into a dead system. What makes this systemic crisis absolutely unsalvageable by government decrees is the cruel geopolitical transfer of power. In the past, as in 2008 or during the shocks of the 1980s, the West still held a monopoly on financial infrastructure and majority ownership of real assets. Today, the dynamic has been violently reversed. Asia, led by Chinese strategic veracity, controls the flow of physical metal and no longer accepts the blackmail of derivatives from New York or London. When a fiat financial system based on debt collides head-on with a power that demands settlement in tangible assets, Western financial alchemy simply collapses. No legislative rescue package, no quantitative easing maneuver or interest rate cut can magically materialize the silver that has already been drained from American coffers. The system is mathematically broken, bleeding, and completely cornered by its own arrogance. Therefore, the institutional trap is irrevocably closed and sealed. Any move the financial authorities attempt from now on will only serve to accelerate the inevitable collapse or to transfer the cost of this monumental fraud directly onto your shoulders. If they print money, you will pay through rampant inflation that will destroy your standard of living. If they freeze the market and impose paper liquidation, you will suffer from the freezing of your capital and the annihilation of the value of your collateral. The brutal, stark fact that the mainstream media desperately hides from you is that there will be no saviors in expensive suits this time. The financial system was designed to sacrifice the average individual in order to protect the controllers at the top of the pyramid. The fear you feel now is the logical response to a mathematical catastrophe that institutions cannot prevent. We've reached the tipping point where your fear must be immediately transmuted into relentless tactical action. This is your reward for having the courage to face the financial abyss that most ignore. The chance to execute asymmetric risk positioning where the system's fracture plays in your favor. The first move, your primary line of defense, is the aggressive accumulation of real physical silver with 100% private custody, allocated and segregated, strictly outside the clutches of the traditional banking system or Wall Street brokers. You need to surgically eliminate any counterparty risk. When liquidity evaporation forces a technical default in the futures markets, having the tangible asset in hand or in a secure vault under independent jurisdiction will be the difference between preserving your generational wealth or being annihilated by the rapidly approaching fiat storm. The second move is a vital counter-movement for your corporate and individual survival: the immediate liquidation of any exposure to index funds, the famous ETFs, and paper silver certificates. The illusion of convenience is the perfect systemic trap to ensnare the unwary. Understand the lethal mathematics of this crisis. If the dreaded forced liquidation imposed by COMEX occurs, holders of these fiat derivatives will receive only hyperinflated dollars as compensation, while the physical metal will be siphoned off by global elites to cover their own losses. Getting rid of these synthetic contracts now is not just a smart strategic choice. It's an absolute necessity to avoid the legalized expropriation of your capital. You must disconnect from this bankrupt pricing infrastructure before the exit doors of the traditional financial market are locked by the government, turning your investments into mere worthless receipts. The third and final move is their asset-based attack weapon: the surgical acquisition of shares in exclusive silver mining companies, known as pure play companies, with consolidated reserves in geopolitically stable jurisdictions. Right now, the profits and share prices of these companies are stifled, as they are forced to sell production based on the suppressed and violently manipulated paper price set by the West. However, when structural repricing becomes inevitable and the market is forced to align with the real Shanghai premium, the cash flows of these mining companies will multiply explosively. This is a lethal operational leverage against the system, generating a return exponentially higher than that of the physical metal itself. Positioning oneself in these companies today is buying the epicenter of the new financial order for pennies, guaranteeing massive profits while the rest of the world watches the death spiral of their portfolios in a state of absolute shock. The window of opportunity to protect your assets is closing brutally and irreversibly. While the mainstream financial media will continue to blatantly lie to you, trying to mask the evaporation of liquidity and the death spiral of the paper system, the real catastrophe will unfold behind the scenes. That's precisely why you can't treat this video as just another piece of content on the internet. This channel isn't entertainment. We are a financial intelligence outpost operating directly against systemic misinformation. If you want to survive this imminent implosion and follow the unfolding of this systemic trap in real time, you need to subscribe right now. Activate all notifications to ensure you receive our tactical alerts before widespread panic takes over the streets and markets are locked down by governments. The global financial elite relies entirely on your ignorance and inertia to execute this silent confiscation of wealth. They want you to remain isolated, confused, and paralyzed by fear while they drain the last vestiges of real assets from Western coffers. By signing up and becoming part of this select community of tactical investors, you are joining an army of sentinels who refuse to be the sacrificial victims of this orchestrated collapse. We decode the obscure institutional movements, expose the hidden technical bankruptcies, and provide the precise compass to navigate this perfect storm. Don't let the algorithms silence the mathematical truth that has just been revealed to you today. Sign up to keep your radar on and your mind shielded from the government propaganda that will try to convince you that everything is under absolute control. Now, I need to know exactly where you stand in the middle of this financial minefield. The implosion of the silver pricing infrastructure will take no prisoners, and your response will dictate your immediate level of vulnerability. Answer in the comments with absolute frankness. Today, at this very moment, what percentage of your assets are still exposed to paper assets, such as index funds and fiat derivatives, compared to the tangible real assets you hold under your strict private custody? Have you already begun converting your financial illusions into physical silver shields? Or are you still blindly trusting the empty guarantees of your bank and brokerage? Leave your answer below, because our goal is to map the real risk of our community and adjust the next tactical guidelines for structural defense. I want you to use the comments section of this video as a true financial warfare forum. Read other members' responses, discuss allocation strategies, and report what you're observing directly in the trenches of your local economies. Are you already having trouble finding physical metals from dealers in your cities? Are the premiums charged above the official price already showing signs of the brutal disconnect with the paper market that I described? Sharing this vital information in real time is our best collective defense against mainstream media censorship and manipulation of official data. The decentralized intelligence we generate here in the comments is infinitely more accurate and valuable than any doctored report published by the Federal Reserve or the big Wall Street banking conglomerates. Always remember the unbreakable golden rule that will dictate the future of global wealth in this new dark age. Whoever holds the physical asset will dictate the rules of the game. Whoever relies on paper will be irrevocably erased from financial history. The monumental divergence between Shanghai and the West is not a temporary anomaly. It is the death certificate of the fiat financial system being written before our eyes. The clock of the systemic trap has already been started, and the evaporation of liquidity will not pause for you to prepare. Review this tactical dossier, execute your asymmetrical defensive moves immediately, and prepare yourself psychologically for the storm of volatility that will tear through the markets in the coming months. Remain vigilant, stay absolutely outside the consensus of the hypnotized masses, and we will meet very soon in our next intelligence update.